I think United Spirits has restarted a move, so that is a buy with a stop of 3100, target of 3260. PC Jeweler on its own and because of Titan is likely to move up, so that is a buy with a stop of 370, target of 384. And Tata Global is continuing its rally from the other day, so that is a buy with a stop of 222, target of 237.
And you have already taken buys on Nifty and on Nifty Bank.
Yes.
Okay, fair enough. Mitesh, good morning to you again. How are trades shaping up for you?
So, Lata, I think stock-wise, Dabur, if you recall, after the numbers had a big gap up, and yesterday tested the gap support and is again moving up. So, keeping a stop at about 339, 338.5, I think that's a good buy. Look for a first target of around 356. And amongst the fertilizer stocks, GSFC continues to show momentum on the upside. It's a buy with a stop at 159 for targets of 172.
Okay. Ashwani, just a question on the softer pocket of the market today, and that is a lot of these material stocks. So whether it's metals, Hindalco, Vedanta, even a Reliance, is there any fresh trade in mind, or if not, at least on a Reliance, where would you place stop losses for all the people who are long?
Reliance kind of moving sideways, but overall the crude price going up is actually positive for Reliance. I think 900, 910, which is the 20-day moving average, the stock can correct to those levels, and at those levels you should possibly buy into it. I think metals, resources overall look strong, but possibly going through a mild correction.
Okay. Prakash, good morning to you. What are you trading now?
Good morning to you, Lata. Two stocks basically from the pharma pack. I'll start with Oro Pharma. That certainly is looking good. Can climb to levels closer to 820 zone, stop below 790. Second trade is Wockhardt Pharma. My target was 700. That got achieved. Next, modified to 710. That's closer there. I would again modify it to around 720 zones and just move the stop as well to around 685 zone. So,
okay. Thanks, Prakash, for that. Ashwani, this call on United Spirits, do you think it could go back to that post-result high?
See, not only that, I think we are in a fresh phase of expansion, and I think the earliest target you should give is probably 3,500. On metals, the PSU metal stocks like Nalco and Hind Copper, all of those guys are doing well. There's something going on, sale, etc., that people believe that probably these companies are going to get sold because the bigger private sector metals are a bit soft, but these PSU guys are trying to price in some sort of extra activity.
Okay. Ashwini, within the PSU bank pack, would you play a Union or an Andhra or an Indian?
So I don't think going in for second rung, third rung is the play right now. Right now, even the mainline stocks are fairly, relatively cheap. So you would still go with State Bank or BOB, which are next in line for the results, because that is likely to have an impact, a much greater impact on these stocks.
Okay. Mitesh, don't know if something like Hathway Cable caught your eye. I mean, these are just some result reactions that have been very, very strong. Titan, of course, we've discussed. Hathway is the other one. Anything that kind of stands out within mid-caps? Any fresh ideas that you're working with?
Yeah, so I think Hathway and Den both have come on the radar. Hathway, I think on Friday had a good circuit, up 20% circuit movement, and today also we are seeing some follow. I think I am looking at targets of around 47, 48 to begin with, but eventually those levels could be crossed and we might head towards 54. But I think from a trading point of view for next 1-2 weeks, 47 should be a logical target, which is still about 20% higher. And on Den also, I think the chart has been sideways, but now showing signs of a possible uptake. So I would want to see the stock get past 96 and then look for targets of 105 to begin with, and even higher levels then can be achieved.
Okay. Ashwani, taken a look at chart of Infibeam?
Well, I have taken a look, and it's breaking new ground. So getting past some sort of consolidation, and which can really take it up to 225, 230. But not right now. If you get a down day, probably that would be a better time, because it's moved from 120 right up to 180 for the last 4 days.
All right. Gentlemen, thank you very much for joining us, and we'll touch base with you, of course, after an hour At the moment, the cynosure of the market quite clearly is Titan. Still up 15% after, of course, touching 22%. Shining on all accounts as far as the numbers are concerned. And we are joined by Mr. S. Subramaniam, the CFO. Good morning, Mr. Subramaniam. Congratulations all round for this performance.
Thank you. Good morning.
Just describe to us the quarter that was. What went so right?
I think the market share gain we've been talking about in the jewelry segment over the last year plus, okay, even before demonetization we were talking about it. I think that's just continuing. And obviously the tailwinds from a regulatory perspective have been what happens after the demon and subsequently now with GST and things like 2 lakh PAN card limits and so on and so forth. I mean, so all those have generally been helping, but the main thing I think has also been our focus on wedding jewelry. I mean, that has really worked very well. So the growth is coming largely from segments we were not playing in earlier. So I think that is where we're seeing a significant shift. And the good thing is not just the jewelry part, even watches is starting to do quite well on the domestic side. Seen the volume growth, we've seen it after a very long time, this sort of growth. So I think, I mean, it's been a good quarter.
Yeah, it has been, Mr. Subramaniam, and watches clearly is the one that stands out. But since your largest contribution is still from jewelry, let's focus some more on that. This quarter was exceptional, Mr. Subramaniam. How much of this is because of higher wedding jewelry sale? I mean, and can this kind of performance be repeated quarter after quarter?
Well, let me caution here that, quarter on quarter, we expect to do well. I think we will expect to gain market share as we grow. That is a pattern I think we can fairly confidently say we will achieve. But growth percentages also depend on the base. Let's not forget that the base will start getting a little tougher going forward because last year this quarter was a very good quarter. We had a phenomenal Dasera to Diwali season last year, which had a 55% growth. So we've grown on top of that this time, but nevertheless the growth cannot be as high as those numbers. So they will be muted. So to that extent, one needs to understand that while we will grow, I don't think the rate can be, you can expect us to do this sort of numbers every quarter.
Yeah,
Sure.
we won't look at the growth number. Obviously, that's base impacted. But, a 3,500 crore run rate, 15,000 crore for the year, is that the way things will be?
I think that's fair. 15,000 crores, etc., I think are definitely achievable. We have given some sort of a guidance some time back where the jewelry division talked of 2.5 times in 5 years. And this is in line with that. If you ask me, and it will be a little front-ended as well. So it corresponds to a little over 20% growth. So therefore, achieving a 25% growth this year, etc., should be something which we should hopefully achieve. Yeah.
Okay, sir. So 25% top line growth this year. That's one clear takeaway. I want to come back to the point on market share that you were making, because I think that's the big monumental shift, and it's been propelled after what we saw on the 8th of November, because the environment in the country has changed with respect to gold and the dealing of cash and purchase of high value items like jewelry. What was the incremental market share increase you saw this year? And how much more do you think you'll gain by the time the year goes out?
See, the problem with the jewelry industry is that it is so unorganized that the numbers that we talk about are not published. They're not really verifiable numbers. Okay, when we say we are gaining market share, I think the way we look at it is look at what others are doing. And if you go by statements in the last month and a half, Diwali season, people have been talking of a 20% plus decline. Okay.
Yes.
So for us to have grown in that clearly means that there's a market share shift. Okay. The second, of course, is our own new customers that are coming in. The rate of new customer acquisition also has been good, which means that they are coming in at from other jewelers at this point in time. And the third point is if you look at our ticket size has also improved. It used to be in the ballpark of 65,000 rupees for a very long time, till about a year back. Over the last 1 year, it has gone up, creeped up to 75 to 77,000 ticket price. So that's a significant shift as well, which means that people are coming in laterally, okay? And that is, again, a good sign of market share gain. So we can only say that we have gains, but it will be very difficult to actually quantify what percentage would be.
Okay. What about watches, Mr. Subramaniam? In a sense that 2 or 3 quarters back, me included, a lot of people were asking you whether it's a good time to actually shut down that division and focus only on jewelry. Has this quarter been a restatement that this division as well is well on its way to seeing good growth, and are you putting some energy over here as well?
Absolutely. See, we've been saying this for some time, that we are taking some sort of a time out on the watch division. We want to re-energize it, and there was a plan which we were working towards. I think many of those things that we were looking forward to do have been achieved or are in the process of being achieved as we speak now. So one is new product launches. The second, of course, therefore, higher top-line growth. We've done a lot. E-commerce has been a phenomenal success in the last 2 quarters. I mean, last quarter was outstanding, actually, our e-commerce sales.
Oh.
So we're really growing significantly on e-commerce, not necessarily from our own portal, but through other portals as well, marketplaces. So we've been doing very well on the e-commerce platform. The thing is the Fast Track brand, okay? It's a brand which was not growing as strongly as it used to in the past, but over the last 3-4 quarters, I think Fast Track is really doing very well. And we are doing well without what we call activations or promotions, which means there is a strong brand pull, and it's doing exceedingly well on the e-commerce platform. This, along with cost focus, is actually what is delivering possibly the EBIT margins.
Okay. No, actually, that was what I was coming to. I mean, in the eyewear space, actually, your margins were somewhat depressed. So, what is your plan going forward now that looks like you're going to be seriously in the money? Will there be, new products, new frontiers, or more energy put into Fast Track and the non-jewelry, non-watch segments?
No, absolutely. Fast Track has always been a focus for us. Right? The fact that it was not doing too well was a little concerning, but a lot of work has gone through it, and the wearables part in Fast Track is something which is growing very well. Our wearables that we came out called Reflex Band has done very well. We've sold more than 2 lakh of those already. So I think some of those new products which are coming out, including the smarter watches, which you will start seeing more and more in the future, I think those are all giving us fairly good hope that the watch division should start doing well. And one other point I also wanted to make, I mean, a lot of people write off the watch division because of the size and the of the business today in relation to our overall size. But let's not forget, we have 15 million customers there, and they also feed into the jewelry business.
Sure.
So I think watches is by itself a very inherently profitable business.
Sure. So I do want to come back to the jewelry business, the lion's share. Now, the market is extremely heartened with the total margin profile that you've done. It's a multi-quarter high. Now, just give us some idea of what the margin trajectory from here on is going to be, given your store rollout plan as well. And as you go on adding these new stores, is there a run rate you'll keep in mind in terms of the quarterly growth rate per store and the kind of investment you will do in creating these new properties?
Okay, so there are 2 points there. One is on the margin itself, and the other one is on store rollout. Store rollouts will happen, as we keep saying. We were rolling out stores as aggressively as possible, even when we were not doing well and we were not growing. Okay, it's always been we've had far more faith, I think, in the market than possibly others did. So we were actually investing when, and those are all paying off if you ask me now.
Okay.
All the investments that we've done in the past. So in terms of store rollout, I think the aggression will remain. We will still be, of course, cautious about who we partner with, because most of the new stores would be franchisee stores. So to that extent, as I said, we will be cautious about who we partner with, but the aggression will diminish. As far as margins are concerned, I think margins are a factor of various things. It primarily starts with top-line growth. So because that gives you the operating leverage.
Okay.
We've been reasonably good in controlling our costs over the last few quarters, and there is a program which is running on that, so that is also helping us.
Okay. All right. Mr. Subramaniam, we'll leave it at that. That's the Reliance Nippon EMC listing. And okay, 295, 297, that's looking like it's listing at a fairly decent premium, 44 rupee premium to the price at which it was offered. 250 was the offer price, and that's a fairly big listing. Star cast on the NSE itself to ring the bell. Okay, now still 40 rupees higher. So that's a grand listing for, I think, the first AMC that's getting listed on the BSE.
Oh yes, 14% gains now on Reliance Nippon.
The IPO came at a very good price, I would believe, because it came at around trailing around 6% of AUM. And with a 24 basis point net yield, it was in line with the global peers as well. So I would say the IPO price was good. Our valuation was actually 10% more than the IPO price. Our valuation of Reliance AMC was 17,000 crores. So clearly, in the current market, when the AMCs are doing well, and this is one of the high yielding companies, I would be of the opinion that if one is holding it, they should hold the stock.
What about the trajectory from here on? Because you said it's got everything going for it in terms of the sector that it's in, the fact that it's the first and only mover as of now. Are there any risks at all? I know we keep talking about the surge of liquidity, this 5,000 crores every month through SIPs, and a large chunk of that is obviously coming to Reliance AMC. But any risks, any concerns that you would want to put out with respect to financials per se?
So definitely, these are cyclical companies, because eventually if the flow of money comes down, these companies also suffer. And that's where our view has been that if you look at the last bull run, 2007-8, people are going for 12-13% of AUM. The good thing is they have not gone for this 12-13% sort of AUM. They have gone for 5-6% of AUM, which has been the average, even if you look at for last 3-4 years. So that way,
They have left something on the table.
So that way, it's not the it's not pricing in 30-40% growth rate for next 3-4 years. It's not pricing in that.
Okay.
Can it still be bought? Sorry.
Yeah, no, actually that was going to be somewhat my question. Was they've collected about 617 crore. So is there some growth in the offing?
Definitely everyone is investing, because they can see that there is growth coming in and there is a penetration story as well. So yes, growth is possible, but again the call is if the markets fall, then our market has always shown that whatever we might say, this time it is different, it has never turned out to be different. So people redeem as well as they don't give you money. So it works both ways. So that's where I would not be sort of a big bull saying that it should trade at 8% or 9% of the AUM, but 5-6% of the AUM where it's trading at 25-26 times earnings. Because what happens is when the AUM growth slows down, the net yields increases. So that's where profitability increases. So if it is trading at 24, 25 times or 26 times earnings, I would be sort of, I would be a buyer of the stock.
Could the stock also become a highly volatile entity? And again, I'm talking about just the sentimental impact of equity. Though debt is a larger profile of the AUM, but just, you look at the screen and you see the stock market. So is that something that could play out when we're in the not so Goldilocks scenario of the equity market?
Definitely. So debt is bigger portion, but debt is not the bigger portion in profitability. The equity is the bigger portion in profitability. So if the equity markets are doing really badly, yes, the stock, it's a cyclical stock, that we need to remember. It's cyclical.
So what would your view be on Reliance Capital now? I mean, the divestment of these gems in the crown is giving a negative impact on
yeah, it's holding company discount, that's what is coming in the company, because the problems are on the balance sheet and the good things are the businesses. So once the businesses get listed, and if you want to own the holding company only, then the holding company needs to be problem free. So once, because you are not going to own the problems and the other parts which are businesses are getting listed. So rather, I would say if the balance sheet is cleaner eventually, then Reliance Capital also becomes a good stock to own. But as the new companies are getting listed, which are the key for Reliance Capital, yes, holding company discount may come in.
Okay. What is the next AMC that you think will list so that one can go and buy their holding company?
The next two large AMCs, actually, you can't buy the holding company. They're too big for the AMCs, like HDFC and ICICI. So the holding companies are too big for the AMCs to move anything in them.
Okay. Well, of course, there is UTI, but you can't do much about that, even if it were to list. Santosh Singh, pleasure having you with us. Thank you very much for joining us and putting that caution on the table as well. If it goes to 6 and 7 times, beware. In the past, it has not been able to hold. It's better to be at 4 to 5% of AUM. We will take a break on that note. We are returning with the latest commodity trends. Stay tuned. There is a lot of money to be made, I believe, especially in crude.
A little quiet on the equity side of the market as we've opened out on this Monday, but it's fireworks in commodities.
particularly the price of oil. Manisha, isn't that so? Good morning.
It totally is that way. Everything in commodities is buzzing, and crude oil, of course, is your news of the day. We are reacting to what's happened over the weekend, and it's a good percentage point of an uptick that you are seeing into the prices here. 3,600 has been taken on the MCX prices, and the global markets as well. You have the Brent prices inching towards $63. You have 56 holding on the US crude, and it's not just Saudi Arabia purging that's taking the prices higher. It also has to do with the US rig count declining, strong demand estimates coming in from Asia, and the markets, of course, are awaiting the China PMI and the trade data, and the further direction, of course, in that space would come in from there. Good going continuing in case of the precious metal space as well. You have the gold and silver prices holding well too. The US dollar is off its highs, and that has been supportive. Markets are looking at nearly 85% of a possibility of a rate hike in December from US, but that has been taken in by the prices, and as of now it is the currency play that you can see on your screens when it comes to gold and silver. Take a look at the metal space, and the electrical vehicle theme doesn't stop playing onto this one. So very strong gains is what we've seen continuing here. You have the copper prices trading at a 3-year highs, another percentage point of gain onto that. The nickel and zinc prices, the steel ingredients, that is, continue to gain up as well. And we have seen many other minor metals like cobalt, lithium, etc. also continue to trade at multi-year highs. So everything that has metal written on it is trading in the positive. That's the kind of trading strategies that we have as well, starting with Grow Value, and they have a buy call coming in for crude and metals. For the metal prices in aluminum, they have a buy with target of 144 rupees per kg. They also advocate a buy in case of crude prices, where they expect the prices at 3640. Another broker, Anand Rathi, as well, continues to give buy strategies in these. For them, gold is a sell, of course, with targets of 28,950 on the lower side, not expected to hold 29,000 in the day today, but they definitely have a buy call coming in when it comes to the metal space. Nickel is their top pick with 840 as an upside target.
Okay, thank you very much for that, Manisha. You're certainly holding up one end of the market. ONGC is contributing about 1.4%. Crude, as it moved towards 64, is definitely going to have a salutary impact on ONGC. But otherwise, it's even Steven on the market. It's the advances are ahead of the decliners by just a nose, as it were. Probably about 5% of stocks more in the green than in the red. As you can see, it's a tight match between the bulls and the bears, and the Nifty and the Sensex are back to where they began, actually, 0.25% lower. We'll take a break, and when we return, we are going to get perhaps more about the big new listing of the day, and of course, lots more results analysis.